Hey everybody, welcome. I'm Rob Booker, and this video is sponsored by IGUS. IGUS is a leading Forex broker. Let's check out the IGUS platform. It doesn't really seem that anything on the economic calendar really matters anymore. And I mean, really, there doesn't seem to be anything that makes any difference except for jobless claims. And so every Thursday, you basically just focus on jobless claims, and that seems to be the dominant economic report and the most important thing that could possibly happen. It's really hard to figure out when we're going to get anything that matters more than that. And I think all the eyes are on economic stimulus and whether the Federal Reserve and the United States government are going to bail out people in the U.S. that have lost their jobs or are temporarily laid off. I know 10 people who don't even want to go back to work because they're making more with unemployment than they are working. But then again, I know plenty of people that don't work that much and like to get paid anyway. So what do you want? I don't really know. So with that said, I want to take a look at the charts, and I might even, all trading involves a substantial risk of loss, and past performance is no guarantee of future results. But I'm getting close to finally, since the great lockdown, getting back into some ideas for some trades I want to take. And so I want to put some indicators on the screen. I don't want to look at the weekly charts. That's absolutely ridiculous. I want to look at the 4-hour chart. That's my favorite chart in the whole world because the Australian dollar Japanese yen is dropping. And this is a really, really big deal because the Australian dollar Japanese yen is kind of the canary in the coal mine. You don't have to do a lot of complicated stuff. You can just draw a trend line on your chart. And this is the financial instrument that most closely resembles and correlates to the S&P 500, the NASDAQ, and most equity indexes as a whole. And when this is dropping, you basically have an early warning sign that equities are going to follow suit. And when one moves but the other doesn't, the other one has to catch up. And it looks like the Australian dollar Japanese yen might want to break lower. And it's already doing that today already. Like we can zoom in here and you can see these candles dropping pretty substantially. And that's an early warning sign that the equities markets in the United States aren't doing well. And we've talked about this before. The US dollar Japanese yen is the other thing here. The dollar doesn't seem to be holding up very well. Gold is strong, dollar is seemingly weaker or just not holding up against a lot of currencies. Not holding up well recently, just in the last day or two against the pound, not really holding up very well on it. So if you look at it on, like, if we go to a 4-hour chart, for example, the dollar is not holding up well against the euro. Look at this. I mean, it's just the dollar is getting absolutely crushed. So what does it take? For those of you that may be stuck on the wrong side of some of these trades, what does it take to see a reversal? So what I'm going to do is I'm going to put an indicator here up on the screen. We haven't done a lot with indicators. I'm generally more of a fan of support and resistance and less of a fan of indicators. But I'm going to put the moving average convergence divergence up. So what we're going to do, folks, is we're going to change the settings of the MACD. And I'm going to see if the good folks at IGUS will let me change it, and they do. So I'm going to change the settings on the moving average convergence divergence. I'm going to do something that no person in their right mind would do. I'm going to change the settings. So standard MACD settings are 12, 26, and 9. And what we're going to do is cross those out, and we're going to go 100, 26, and 9. And what that does is it creates much, much wider swings back and forth. And I would say it's a much smoother movement back and forth, not as jagged and wobbly as a traditional MACD. And when you look at things differently than other traders, you get results that are potentially different than other traders. And so what I want to show you is, I'm going to erase a bunch of these drawings, and I want to focus on the bottom part of the screen here and on this MACD. So when you see the MACD 126 and 9 turn upward at the bottom, turn from bearish to bullish on the MACD, it's generally an indication that price is rolling over and turning downwards. It's a contrarian, it's a weird contrarian indicator. And when the MACD starts to turn negative and roll over here, it's an indication that price is going to go up. So how do you know when the euro might turn and come back down? Now, we've already talked about 69. We talked about this level right here. We've discussed this. We said if these levels were broken, they would lead to the next one, and we're now at resistance. We're here. So what you need to wait for is watch these MACD levels. It's easy to put up on your IG platform or any other platform that you use. Wait for this MACD to turn upward on the bottom, and from bearish histograms to green bullish histograms. And then that means price could potentially fall lower. And so that's what we're looking for. That's what I want to see. I want to see, before I take any trades, that's what I want to see. Now, if we look at the Australian dollar, Japanese yen, one of my favorite currencies. It's not my favorite currency in the world. It's one of my favorites in the world. Why don't we put that MACD up on the screen? And we'll see what that tells us about, essentially about the equity markets of the world. The equity markets have been bullish. However, this is the point I'm trying to get to. If the MACD here turns upward, and these red histogram bars turn green to bullish on the bottom, that means we're rolling over on price, and that means price will fall. And this is an upward trend, and the equity markets are an upward trend, as my friend Brian Shannon would say, that is innocent until proven guilty. Until that turn of events on the bottom of the screen and this MACD, until that turn of events, it's bullish markets all the way, and we may even bounce. We may fall to this trend line, which it seems likely that we'll do, and then we'll probably bounce. But if we break this trend line and the MACD on the bottom turns up, that means price is lower. And that sets in store a ton of really interesting trades. And this is what I'm waiting for. I'm ready to sort of take a longer term position, and I'm not recommending anything, and I'm not a broker, and I'm not a professional, and I'm not making, this is not a video intended to give you any recommendations, and price could turn up, but there's two sides of this. We could bounce off this trend line, or we could break through, and if we break through that trend line and this MACD turns up, then 74 is in view, 73 is in view, and I think then, it's not even on the screen, you have like around number 70 that's in view for the Australian dollar, Japanese yen. Those are some things to look for, and the catalyst for all of this is really jobs reports. If the second great lockdown begins and job losses continue, or there's not another stimulus package, that seems to me that it would be an indication that the Australian dollar, Japanese yen can break through that trend line, the MACD can turn, and we can see some real significant long-term movement lower in the Australian dollar, Japanese yen, and in the equity markets. And watch for that on the euro as well. If you're caught in a euro trade, maybe in the wrong direction, that's the indication that I would wait for. And I wouldn't be selling the euro until we see that rollover that we talked about earlier. Once again, thanks to IGUS, a leading Forex broker, for sponsoring this video. I love you all. Thanks so much for being here, everybody. And we'll see you next time.